Hello, this is Richard Posson. It's 10:23 a.m. Eastern Time, June 24th, and this is a quick discussion of what the business cycle model is saying about the stock market, specifically for the mini S&P 500 futures. What we found is that an L3 top occurred June 19th, another top occurred June 10th. Now the interesting thing is there's a little bit of a rule violation of this cycle. The L3 cycle is a short-term intra-month cycle, creating trends of a couple days to a couple weeks. That cycle was actually short on pattern, internals. So it's kind of like a oops. If that's true, the market should snap back this week, all the way back. I'm suspicious it's not true, that we've already seen too much damage, the price is already too low for that, and we're just going ahead and saying, missed that particular top. We did catch the L4 top, we did say it was going to be down that day at least, and maybe a little bit for the next day, but we said, and we knew we were getting closer to a bigger drop into a far more important bottom. But we just didn't think it would come this low. We thought if it held on to 1591, yes, it would snap back. Now, I've seen stranger things than this, so it might turn out to be a very nice week after all for stocks. But the best forecast is saying, no, just give up, call it L3 top, got an L3 top here, got an L3 top back here, make your forecast for your next L3 top, and that's July 1st to July 3rd. Now, because of the July 4th holiday, it doesn't even have to top to the end of next week to even the beginning of next week. So, and quite often trends will get extended because of the reduced amount of time for trading. Now the model is also suggesting a price objective around 1616 to around 1637 for that L3 top. The 5-day stochastic is oversold. Price did come down to the 100-day average, which we've been talking about as a potential objective. And on the Dow Jones, we were using 14,500s as our maximum objective, and it's there today. This is our window reversal, and we have an old trend line coming through here that some might call long-term. I think it just comes back from last November. The market's come to that. It's violated the 100-day average. My guess is it's going to bottom in this window reversal today or tomorrow, and we're due for a little L4 intra-week, very short-term cycle bottom now. And my guess is it's going to turn around, come up out of this window reversal, and rally up to L3 top. Now, what you could use for a clue is if it takes out today's high of 1586 and a quarter, then we're on our way for an L3 rally. Otherwise, I suppose you'd say leave it alone because it's just behaving or has behaved so poorly here. Now, let's zoom out to the weekly chart. Or we'll zoom out with the use of the weekly chart, I should say. And we want to look at larger trends. Those L3 trends now look like pops and drops every few weeks for cycle bottoms, tops, and you can break them apart for the cycle uptrends and downtrends. And what that does is allows us to build out into larger trends, L2 and L1s. And they last 1 to 5 months. Those are the intermediate inter-year trends. L2 is always the shortest, but L1 can be as short, but normally is the longest and is the most important trend we follow during the year. We had an L1 top back in May. The trend is down, and by the way, we missed that top by just a couple of days, but at least we had warnings on the way down, and at least we had warned for a while we could have an early top or some kind of truncated top. Now, at any rate, it's trending down, and it's due for an L2 bottom now. It's met most of its price objectives. We're allowing a little bit lower, maybe down to 1545 or something, but really think the 1550s should hold this market just as 14,500 should hold the Dow. We believe it'll rally up out of this L2 bottom into an L2 top, but it may very well bump its head on a trend line that's coming in around the high 1630s on up to about 1660s. And we do want to watch out for resistance near 1627, I think, or somewhere in the 1620s. In fact, if they bounced it this week, it's likely probably, 1660 would be 1618, something like that, or 1616 would be resistance. So at any rate, it should rally for July, but it may only be a corrective retracement rally, but a major one, before declining into a bottom late August, early September, something like that, and may go still lower, and that's where all that 200-day average talk can fit in. We don't believe the 200-day average, that's an objective at this time. We think the market's overdone and needs to bounce back some. Now, another scenario, however, says it can rally higher than you think in this L2 top, and by the time it declines into an L1 bottom, it's going to bottom at a higher price. So this tells us that, yes, we shouldn't ignore the opportunity or the possibility. This is actually a very nice buy right now for the stock market. It's just we also have to keep in mind it could be just a retracement of some kind of trading range or floundering around from now to late August, September. Then we're bullish into year end and on into next year. And as you zoom still further out, we're long-term bullish. This is nothing more than a correction and a long-term bull market. 5-week stochastic made it to oversold, so keep an eye on it. You see a close over this week's current high of 1586.25, more so on a weekly close, that's bullish. And if it can close over the 5-week average currently around 1603.80 or something like that, that's even a bullish sign. Best forecast is stock market is probably going to bottom this week and rally for July. Now the key is, does it bottom today? And that's actually the best forecast of bottoms today, but it can take all week to bottom. Thank you.